What's up, everybody? Buying a home is most likely the most expensive thing that you're gonna buy in your lifetime. So the last thing you need is to make any mistakes that would cost you even more, especially if you could have avoided making them. So today we're gonna go through some of the biggest mistakes home buyers make so you don't do the same. So let's dive right in. One of the biggest financial disasters that you can face as a home buyer is skipping the home inspection, or even worse, doing a home inspection and ignoring the red flags. And I know that some of you are gonna say that you were gonna do a home inspection, but the seller said up front, we're not gonna fix anything, so why did you bother? Well, it's not as simple as that. Let me tell you a very quick story. A colleague of mine had a client, let's call him Mike, who bought what he thought was his dream home. The place looked amazing. It had an open concept kitchen, hardwood floors, big backyard. It was perfect. But guess what? He waived the home inspection to make his offer more competitive. Bad idea. He got the house, but as it turned out, the house had major plumbing issues. Within 6 months, he had sewage backing up into his basement. $15,000 later, and he really regretted it. If he had done the inspection and informed the seller through their agents about the major plumbing issue, they could have negotiated a repair or a credit to the buyer so they could repair it themselves. Because here's the thing, if they don't address it with their current buyer, they have to now disclose this to the next buyer because they now know about it. Better to deal with the devil you know than the devil you don't. The lesson here, never ever waive a home inspection. And quite frankly, never believe the sellers when they say they will 100% not fix anything, so why bother? And don't just glance at the report, ask questions, get second opinions, and factor those repairs into your decision. Mistake number 2, not understanding your true budget. A lot of buyers make the mistake of only focusing on the mortgage payments. They think, if I can afford the mortgage payment, then I'm good, right? Well, guess what? No, you're wrong. Your true home budget includes property taxes, homeowners insurance, HOA fees if applicable, maintenance and repairs, and utilities, which can be way higher in certain homes. I actually made this mistake myself when I bought my first home. A mortgage, totally manageable. But then I got slapped with a huge property tax bill that I wasn't prepared for. Suddenly my affordable home became really expensive. So before you buy, sit down and calculate the real cost of home ownership. Make sure you're not just house poor, because that's no fun. You want to have some money left over to actually live your life. And while we're talking about your mortgage payment, another huge mistake people make is that they walk into one bank or they speak to one lender, get pre-approved, and they think they're done. No, don't do that. That's like buying the first car you see without comparing prices. Here's a shocking stat. Over 50% of home buyers don't shop around for a mortgage, and they usually end up paying more in interest. Even a 0.5% difference in your mortgage interest rate can mean tens of thousands of dollars over the life of your loan, depending on your loan amount. My advice, get quotes from 3 different lenders. And make sure you're comparing apples to apples, meaning all the loan fees involved, as well as the rate and the terms. You would be surprised how much money you can actually save by negotiating. And make sure you do this before you find the house you want to buy, because once you are under contract on a house, the clock starts ticking and you just may not have time to shop around for a different lender. Moving on to one of the biggest mistakes people make when buying a home, they don't check for past insurance claims. Most people don't realize this, but a home's insurance history can tell you a lot about it. Have you guys ever heard of a CLUE report? CLUE stands for Comprehensive Loss Underwriting Exchange. It's a report that shows all of the insurance claims on a particular house for the last 7 years. So why does this matter? Because if a house has a history of water damage claims, there could be underlying issues, even if they fixed it. History of roof repairs could mean that it leaks every time it storms. And some homes are so high risk that insurance companies won't cover them at all. Imagine buying your dream home only to find out you can't get any home insurance, or your home insurance premiums will be through the roof. So how do you protect yourself? 1, you can try to get a CLUE report. 2, and this is the easiest way to do it, check with your insurance company. You might have one that insures your cars, or ask a friend or your real estate agent about this house before you commit. And if there is a history of claims, get a specialized inspection to confirm that everything is truly fixed. I had a client a while back who hired me to sell their beautiful, newly renovated home. The seller had disclosed a huge insurance claim that had started from a very small leak, but it was left unnoticed for 5 months because the seller spent the winters in Florida and the house is here in Maryland. So that little leak over 5 months, well, it turned into a nightmare. I think this insurance claim was around $600,000 or something equally crazy like that. Well, the seller decided to use that money to renovate the house and decided to sell it. Everything was disclosed and the house looked amazing. But here's what happened. The buyer couldn't find anyone to insure this house after such a big claim. We had to keep delaying settlement until the buyer could find someone to insure it, which they eventually did, but it was really expensive. Fortunately, this buyer could afford this very expensive home and the super expensive home insurance, so it all worked out in the end. But can you imagine if they couldn't? They would have been out thousands of dollars and could have been in breach of contract if the seller didn't graciously keep extending the closing date for them. And they could have lost the house as well. So don't skip this step. It can save you thousands and possibly a lot of really bad headaches. Okay, next up is one of the most painful mistakes a home buyer can make, and it can literally cost you the house. When you're under contract to buy a home, you need to freeze your finances. No big purchases, no new credit cards, no moving money around. I knew a couple, let's just call them Jake and Lisa. They were so excited about buying their new home that before closing, they decided to go out and lease a brand new SUV. Well, guess what? Lenders saw the new car loan and their debt to income ratio changed, meaning they no longer qualified for the mortgage. Yeah, they lost the house. And here's another story that you may have heard me recount before because it was one of the most crazy things I've ever experienced. I had one of the most lovely clients buying his first home for his soon-to-be fiance and himself. Well, he decided to buy the engagement ring while we were under contract on the house. And to top it off, he decided to finance it, which makes it a double whammy. The loan for the ring popped up the day before settlement and threw his debt to income ratio right out the window. He was no longer approved for the loan. The sellers were under a strict closing date because they were also buying a house, so there wasn't a lot of room or time to figure this out. Fortunately, we had an amazing lender who figured out a way for the borrower, my client, the buyer, to borrow money from his mom because a gift had already been approved for the mom to give to her son, which would then allow him to narrowly slide into loan approval. It was so stressful and he was so close to not only losing the house, but his earnest money deposits and all the money he had already spent on the house, inspection, everything else, which was thousands. This was way too close for my nerves, but in the end, he does now live in his dream home with his now wife, so it ultimately did work out. So pay attention to these rules. Do not buy a car, including a lease, open a new credit card, take out any new loans, or quit or switch your job. Lenders monitor your credit until the day you close, even if you've been pre-approved. Any financial changes can kill your mortgage. If you have to make a financial move, please, I beg you, talk to your lender first. Okay, just a couple more mistakes to avoid. Don't fall in love too fast, and always think long term. And no, I'm not talking about your future wife or husband, although these warnings do fit that too. But I'm talking about the house. I get it. You walk into a house and bam, it's perfect. You love it. But stop. Falling in love too fast equals making bad financial decisions. Sellers and real estate agents can sense when a buyer is really emotionally attached to a home. And guess what? That's when they push the price up or they convince you to overlook some issues. I had a friend named Sarah who got so emotionally attached to a home that she ignored some serious issues like an aging roof and outdated plumbing. She just thought, I'll fix it later. Well, guess what? Later cost her $100,000. So here's a tip. Always go into a home tour with a logical mindset. Look at it like an investment first and an emotional decision second. And listen to your friends, especially those who work in the business. Sarah was in a different state than me, so I didn't represent her. But my advice was sound, and she chose to ignore it. And finally, a lot of first-time buyers only think about what works for right now. But you really have to think 5, 10, 15 years ahead. Just ask yourself, will this home still fit my needs in a couple years? What if my family grows? Is this area up and coming or declining? How's the resale value? This is a common mistake a lot of people make when they're so focused on the house and they don't actually research the neighborhood. Research crime rates, school rankings, and ask your realtor their opinion on resale value. Always ask yourself, is this house a smart long-term investment? I bought my present house 19 years ago. We had just moved back to Maryland from California. We didn't really know what our future finances were going to look like as we were both starting over, only this time with 2 babies. So, besides the house, which to be brutally honest was not my dream house, we really focused on long-term. Schools, location, commute to Washington, D.C., which for us is basic resale criteria. In the last 19 years, we went through a lot of change, including the financial crisis of 2008, as well as a lot of personal changes. The good news? We had this house, which was in the right school district for our kids. So as long as we could weather the storm, or storms I should say, we would be in good shape. 19 years later, I am still in the same house, which I have come to really love and appreciate. And it turned out to be an amazing investment. So let's recap. Here are the biggest, most expensive home buying mistakes to avoid. Skipping the home inspection, ignoring past home insurance claims, get the clue report, making big purchases while under contract, no new loans, not budgeting for the real cost of home ownership, not shopping for the best mortgage, falling in love with a house too fast, and not thinking long term. Buying a home is very exciting, and it is also a huge financial decision. So take your time, do your research, and make smart choices so you don't end up regretting it. And hey, if you found this video helpful, go ahead and smash that like button and consider subscribing for more home buying tips. And I really want you to leave a comment below telling us what's the biggest mistake you've seen people make when buying a home. Thanks for watching. I do appreciate it, and I'll see you in the next video. Bye!